Hi, I'm Brent Sinclair and welcome to Knight Frank Newcastle's Commercial Property Update. This month I'm joined by Dan Barry from our industrial sales team, here to provide us a bit of a snapshot with the local industrial market. Now Dan, we've seen a positive shift in the local market over the last 12 to 18 months. What's changed since about 2 to 3 years ago?
Yeah, thanks Brent. Look, I think the real thing that's changed in the industrial marketplace is the confidence. 2 to 3 years ago we were seeing coal trading around $50 US a tonne. Which in the Hunter was causing businesses to downsize and or close completely. Fast forward to today, we're trading towards $100 US a tonne, and demand levels are reflecting that.
Yeah, great. And with that renewed confidence, what are you seeing in terms of property in the market?
Without a doubt, the most competitive bracket is that sub $2 million price point. Low interest rate environment on the back of self-managed superannuation funds and those sort of creative purchasing styles has seen a real uplift in that market. So much so that we're seeing an interesting situation whereby vacant properties are perhaps selling on tighter market yields than those that are tenanted. And a good example of that is a property in Glenwood Drive, which we've just recently sold for a sub 7% on the market rental.
Yeah, great. And within that market, within that industrial market, what other sectors are performing well?
Land sales are strong at present. We're seeing new lots coming on in Heather Brae, Beresfield, Cameron Park and Steel River, and we're recording prices north of $200 per square metre.
And what about industrial leasing?
The leasing market's strong at present. We're seeing a lot of new pre-commits come out of the ground, in particular the main freight facility at Beresfield. One interesting factor, I think, Brent, is 2 to 3 years ago when we were taking on leasing appointments, we were quoting vacancy periods of around 12 to 24 months. What we're seeing now is that figure is now reduced to 3 to 9, which is on the back of that demand that I was speaking about earlier, and it is a positive thing. A good example of that is a property that we've recently leased at 18 Statham Street at Bennett's Green, which was leased on a 7-year lease within 3 months of appointment.
Great. And what's happening in terms of rents in the market?
Industrial rents have enjoyed a slight increase. Look, we're still around, generally speaking, the $110 per square metre mark for warehouse space and around $160, $170 for office. However, I think this will rise on the back of rising land sales and increased demand.
Great. And we've got 2 great investment products on the market at the moment, one being in Tyers Hill and one in Somersby. Can you give us a price guide for each of those and a bit more information?
Look, the real value lies in those 2 assets is the tenure. You've got 10 years on the Tyers Hill lease and around 9 on the Somersby property. Tyers Hill is an interesting one whereby you've got a concrete batching plant that is within 4 kilometres of the Newcastle CBD. What I think that opens itself up to is an opportunity for investors and medium to long-term developers. Somersby has a fantastic tenant profile, being Bidvest, and carries a price tag in that mid $7 million range.
Great. Well, look, thanks very much for joining me today, Dan. If you'd like any more information, please get in touch with our office. Otherwise, please like my business Facebook page, and I'll be sure to keep you updated throughout the year.